The Aussie dollar is flying at the moment, up 1.5 cents in a week, and back to exactly where it was on Australia Day, before it tumbled to 64 US cents in the first couple of weeks of April. Now, the reason for the turnaround is that traders have flipped on the subject of interest rates in Australia as a result of last week's higher than expected inflation rate. A week ago, the futures market was betting that there was a 50% chance of a rate cut this year, but now they reckon there's a 50% chance of a rate hike. One economist says there's a 100% chance of 3 rate hikes, about which the less said the better. But the big news on global foreign exchange markets at the moment is the collapse of the Japanese yen, which has gone this year from 140 to the US dollar to 156 and 103 Australian dollars. Now, it's been sliding for 3 years as the Bank of Japan kept interest rates negative while the rest of the world hiked. And the slide accelerated recently as it held the line while markets started to anticipate more rate hikes elsewhere. 5 years ago, a meal at a decent sushi conveyor belt in Tokyo would have set you back 40 Australian dollars. Now it's $30. So what are you waiting for? The share market rose nearly 1%, with solid buying of banks, especially Commonwealth Bank, after it lifted the maximum bonuses for its loan salespeople from 50 to 80% of salary to try to defend against Macquarie Bank's attack. There were solid gains on other global markets, and not much happened on commodity markets. And finally, all social media usage is down, but the biggest loser by far is Elon Musk's Twitter, which we refuse to call X, while not using it. And that's finance.